In this presentation, we will continue on with our comprehensive problem related to a public university. We have the information on the left-hand side. We've been entering that information into the blue area on the right-hand side. In prior presentations, we have entered the transactions for a time period and done the closing entries. This time, we're going to take the adjusted trial balance and work out or make up and put together the statement of net position, similar to or pretty much the same as a balance sheet in a for-profit type of organization. So you'll recall we've been posting this information to our trial balance. We have two trial balances. The one up top is going to be the trial balance that we have been recording the information to primarily, resulting in what we would think of as the adjusted trial balance. The one down below then is the one where we took these numbers from the adjusted trial balance as the beginning numbers, then adjusted them for the closing entries, closing out those temporary accounts. We will be working primarily with the top accounts up here, the top trial balance, when working through the statement of net position, the balance sheet type of statement. And we may then refer to, however, the post-closing trial balance just to pick up the ending numbers for the net position number, which will be these three numbers. Okay, so as we do this, recall that when we go through this process, notice that many times people would say that you need to do the income statement or statement of or the statement of activities first before the balance sheet. So if you have a test question on that, that's probably the order that you want to put on the test question. I do think that you can do the balance sheet without the income statement or statement of activities, and I actually recommend doing that. So I actually do the balance sheet typically first because it's going to be easier to work through, I think, something that is in balance, and then think about the difference or the change from there. It gets you a good starting point, rather than waiting to the last number that you input on the thing to see if you have anything that works. So that's what and I'll show you the argument again when we get to the last part of the statement of net position, that being the net position component, assets, liabilities, then the net position component of it. And so we'll see that process there. That's when we'll jump basically to the closing entries. Okay, so we're going to be working from top to bottom here. Top to bottom, and we may just even want to hide some of these cells. That might make it a little bit easier. I'm going to hide cell P and Q so that we're just working with column R. Let's put our cursor on P and highlight to Q. Let go, right click on those selected cells and hide them. So then we have a nice trial balance right next to each other. Easy working conditions to work with, which is ideal. This is ideal. All right, so we're going to start off with the assets. We're going to start with the assets. We're going to go straight from top to bottom. The first asset, of course, will be cash. So we're going to pick up the cash up top. We're going to pick up the cash into the inner column. We have two columns, but recall that those two columns do not represent debits and credits. They just represent a subcategory. So within cell U3, we're going to say this is equal to the $1,677,000. Then we're going to pick up the accounts receivable. However, we will be picking up the accounts receivable net of the allowance for doubtful accounts. Therefore, I'm going to put in accounts receivable and then net. And then we're going to say this number minus this number. This number is a debit, this is a credit. We want to just net them out over here in a plus and minus format, so we can just simply use a sum formula because of the beautiful formation of the trial balance, making it nice and easy for us to do so. We sum those up, we get the difference of them, that being accounts receivable net. Next, we have the grants receivable. So I'm going to pick up the grants receivable. That's going to be in cell U5, and I'm noticing here that the grants receivable is 0. So we're going to go back and we're going to make an adjustment that we said we were going to make in a prior presentation, in that the grants receivable, something was misposted from the grants receivable into accounts receivable when it should have been in grants receivable. If we see something like that, let's see how we might make the change, make the adjustment. I'm going to unhide these two cells. So I'm going to unhide these two. So I'm highlighting from O to R, right-clicking in the selected area and unhide. Then we're going to go into accounts receivable, and I'm going to take a look at what is included in there. Within these transactions, you'll note that one of them is actually grants receivable that was recorded into accounts receivable. I'm going to make that adjustment. I'm going to fix that now. So we're going to say, all right, this is the one which I pointed out in the prior presentation. This is the time we're going to fix it now. So we're going to fix it. So now we are in L10. So that L10, see, we are in cell L10. I need to delete over here. So I got to pick out L10. So if I double click on this, for example, here's L10. I don't want it there, I want it here. So I could just copy the whole thing, or let's cut it. Control X instead of Control C to copy it, or let's just right click and cut it. And then I'm gonna paste that right here. Right click or just Control V, and that'll put it there. So I now have posted it to the grants. So if I say enter, now we're at the 27,000. And that, I believe that is correct. So we're good there. I'm going to now unhide this, go back to our process of recording the statement of cash flows. We're going to hide these. We're going to go back and rehide these, I should say. Cells P or columns P and Q, selecting, left click, dragging over to column Q, letting go, right click and hiding those columns. Okay, so now we're at the grants receivable. Grants receivable, we're going to say in cell U5 is going to be equal to the 27,000. All right, then we're going to go to the interest receivable. Interest receivable. In cell U6, we're going to say that that's going to be equal to the 900. Then we have the investments. That's going to be the investments. And that's going to be equal to the 280,000. Then we have the capital assets. So the capital assets, we will just record those out like so. And that's going to be equal to the 2,404,000, and then the related accumulated depreciation. And we might want to just say this with words and say less. So we might want to say accumulated depreciation less accumulated depreciation. Now you could put this in there as a negative as well, or just rely on the less to be to not need the negative. I'm gonna put the negative in there this time. So we'll see the negative. So we've told our reader with words, hey, it's all these things, minus this, less this, and we've shown with the fact that we put brackets representing a negative number here, not a credit. All right, so then we're going to go to the total. We can then sum this up to give us the total assets. So there's the total. We're going to pull that total out into the outer column in cell V10. So within cell V10, we're going to say equals the sum, our trusty sum formula, and select those numbers and pick those up. So there is our total. So we found a home for all of these. We can double check it by just selecting those and see if we come up with the same number. The 4,247,900 looks good. Then we're going to go to the liability accounts. Liability accounts is going to be these items down below, the orange accounts. And so we're going to pick up the accounts payable. We're going to pull this into the inner column, not because it's a debit or a credit, but because it's going to be a subcategory. This is a credit over here. We don't want to represent a negative number or a credit in the statement of net positions on this side. Therefore, instead of saying equals, we're going to say negative of that 57,000 and enter. Then we'll pick up the unearned revenue and the bonds payable. So we'll pick up those two numbers, same process. We don't have to pick up the accrued liabilities because it's 0, obviously. And then we're going to pick up these two. There's that. And that'll give us the total liabilities. So then we'll say total liabilities, and we'll sum these up in the outer column, equal the sum of those three numbers, and enter. That's going to be the 942. Finally, we will have the net position. This is the thing that's kind of different, pretty different than a for-profit organization. Net position still being assets minus liabilities equaling the what would be equity here in net position. However, we have to break this out between the net position restricted and unrestricted. So to do that, this is where people often might say you need the statement of activities to help out with that. However, we could see the total here already. We already know the total in net position is going to be that 3,305,900. So if we needed some other work to fill this out, and we didn't know what the end results, in other words, for the net position, net investment in capital assets, restricted and unrestricted, would be, we could still push forward and then finish the statement of net position, see that we're in balance, feel confident about that, and then go work and further work out the details. So let me show you what I mean here. We're going to say these are the three kind of account categories we're going to have. Net position, net investment in capital assets, this one. Restricted, this one. Unrestricted, this one. We can't pick up these numbers in a standard trial balance from a adjusted trial balance because we haven't closed out to them yet and therefore haven't allocated to the proper accounts at this point. What we can do though is we could say, I know what the total net position should be, and I can say this should be the negative sum of all of this, right? All of this put together, credits minus the debits, would equal that 3,305,000. So the negative sum of all of that should work. And then we can see if we're in balance, right? We could say, okay, are we in balance then? We have the liabilities and the net position adding up to the 4,247,900, which equals the debits of the 4,247,900. Then we can say, yes, we are in balance. That makes us feel good. At least we're working forward on that. Then we can further do the statement of activities and then find the breakout between these three accounts. Now here, we've already done the breakout because we did the closing entries. So now we're going to go down to the closing entries down below in our second trial balance. These are the closing entries which we use to close out the temporary accounts to the proper net position accounts. And these are our three net position accounts. And these are the breakout of those three accounts. We're now going to take these and use them to fill out the final portion of the statement of net position. So this is where we're going to kind of jump down to the closing entries here. So we'll say net position, investment in capital assets. We're going to flip the sign. So within cell U17, I'm going to say negative of, scrolling down, picking up this number, the 3,303,000. And then the restricted amount in cell U18, we need to flip the sign. So I'm going to say negative of, and then scroll down to the 3,093 and enter. And then finally, we have the unrestricted in cell U19, negative of. Scrolling down, we pick up the 1,693,600 and enter. And then we could recalculate this number if we so choose by saying equals the sum of these three. And that'll give us our final number. If we add these up then, these two, liabilities and net position, assets equal liabilities plus equity, or net position equity, is the 4,247,900, 4,247,900. Obviously, the format of this can also be thought of as assets minus liabilities equals equity or net position in this case, which means we could just simply take the 4,247,900 minus the 942. That gives us the 3,305,900. Again, this is the amount that most people would think of as the net value, and that's the amount they would try to start spending, right? Or try to put some claim to. And up here, that's why we break out the restricted portion. We're saying, hey, this one's already kind of spent in capital assets. It represents capital assets, and click in case you can't really see that up top, or and this one is restricted as well. So the one that people are going to try to lay claim to possibly would be the unrestricted capital assets in that process.